Good evening, everybody. Welcome back for another video, Sunday, May 15th, 2022. Um, Market update. So Bitcoin closing above the $30,000 level on the weekly candle. Ethereum still with a bearish, weaker posture. We'll take a look at that. And just some comments on the Austrian School of Economics, a book that I started reading, and opened up the first chapter, and was almost blown away at how applicable pretty much the entire thing was to the markets, but certainly for anybody who had been involved in Terra LUNA in the collapse, and pretty eye-opening just how things like that can and have repeated over and over in history, and Terra LUNA just being sort of a prime example of that. So let's look at Bitcoin. So we have again our weekly chart with just a very simple classical charting idea that we see a trading range, that we draw trend lines that connect the major pivot points and have the most possible touches, and simply measure the price within that range and project that price below the breakdown point, and have a technical target of about 19,500. Now, we don't know if it's going to get there, how it may get there, when it might achieve that target. Generally, these kinds of things, if they do not fulfill in a straight line. And so to get some more clues, you start on your longer term time frames, and then sort of just like we did with the UST chart, going to the shorter term time frames to look for any sort of shorter term clues as to where the price may want to move in the shorter term. And so what I'm seeing on the daily chart through here is sort of that 30,000 significant support range from the summer of 2021, and also a little earlier in the year in 2021 as well, and the price sort of piercing below and now reclaiming it. And so it's not altogether unreasonable to see sort of a bearish retest of this bottom trend line after a pierce below. So we can sort of zoom down and kind of test our hypothesis to see, if that sort of might make sense for the short term. So that's where our sort of 4-hour time frame could come in handy. And so what I'm seeing on here is sort of a rising demand, at least in the short term, with sort of a flat level of supply, a sort of ascending triangle type pattern here. And so, if we sort of imagine that we have a horizontal level here, which sort of bisects this choppy range here as well, and it's conceivable then that a measured move could be taken using this price pattern, and then subsequently projected above. And we do get about 37, let's say 38,000 as sort of the technical target for this short-term price pattern here. So that's not too far away from the underside of this longer-term support, now potentially turned resistance from the trading range. And generally if it were to move and fulfill that target, generally those kinds of moves will generally pierce above and then revert down. So I wouldn't be surprised to see a move in the short term back to that, maybe even 40,000 level based on this, just on classical charting alone. Um, you know, Further supporting a potential short-term bottom and reversal being a heavy volume here on this, in this general cluster. Just showing that there was a bit of a defense of that, say, 25,500 level down at the bottom here. So let's see how Bitcoin does, and take it from there. Ethereum, same kind of principle through here on the weekly. So we do have sort of a rounding top or double top or a complex head and shoulders type pattern here, and same kind of principle if we take a measured move using the range of that pattern projected from the breakdown point. It's not altogether unreasonable to anticipate a move to the low 1000s range. Again, no guarantee it will get there, and if it does, we don't know when, how long that's going to take, what it's going to look like, and generally things don't happen in straight lines. So similar kind of idea through here. If we sort of drill down into the short term, we might imagine actually a similar kind of triangle type pattern in the short term, and it does look like we have something like that through here. And so assuming this kind of rising support holds, and you could imagine that we have the maximum number of touches here. Again, this is pretty short term, but again, just like with UST, the short-term price can, the short-term action can give you an idea of where things might want to go. So if this triangle does complete and confirm, then it would not be unreasonable to anticipate a move back up to, let's say, the 2700 level for Ethereum. In the short term, assuming the pattern doesn't fail and head down to the downside, but again, these sort of pierce flush below the longer term support. Generally, you will see a retest of the underside of that line at the very least before perhaps a continuation down or a failure, sort of just a flush and then a spring back up and a continuation of either sideways or upward action. So that's something that I'm looking at here in the short term for Ethereum. For Ethereum to Bitcoin, we had been holding this 50-week moving average, and it does look like the candle closed below and actually perfectly kissed the bottom of this triangle. So it just goes to show you how powerful classical charting can be. Not so much from a trading standpoint on this, but just to sort of see what Ethereum is doing relative to Bitcoin. So, for a triangle like this, we really don't know, which way it's going to go. So far the trend has been up, since this sort of 2019 low, but a triangle doesn't necessarily have to go, sort of a symmetric triangle. Could break either way. So, if you think that it might break up, then perhaps to that 0.1 BTC level for Ethereum, should it continue to outperform against Bitcoin in the short term, or sort of a move down, let's say here, and a move down from this symmetrical triangle would actually perfectly come back to this longer-term trend line. So um, at the 0.0468 BTC level. So pretty interesting how that works out. And again, you know, uh, we can try looking for shorter-term clues, but I think for this ETH to Bitcoin ratio, I'd like to see how it sort of shakes out, and then go from there. Um, just one altcoin, Polkadot. So in my very first video, I used Polkadot as an example of relative weakness against Ethereum. In the aftermath of the sort of Terra LUNA collapse, you know, it's conceivable that in terms of the interoperability plays, Terra LUNA formerly, basically being a dead coin now, so I try to refer to it in the past tense, formerly making the Cosmos ecosystem its home with the IBC ecosystem, and the purported goal of Terra LUNA to sort of provide that stablecoin liquidity to the Cosmos ecosystem. Of course, that thesis has collapsed. But it's not altogether unreasonable to just take another look at Polkadot and see, in terms of the interoperability plays, as one of the larger cap, plays in this space. Now, I think altcoins in general, may very well have a lot of continued downside, but in the short term, we did get a weekly close above this sort of historical pivot level here from the summer of 2021, where it did rebound with the overall market, and sort of this almost hammer-like candle where it really flushed below and then came right back up as sort of like a spring. So, if not unreasonable to look at maybe a short-term bounce, and we can use the power of technical analysis to, again, sort of give us clues as far as where it might want to go in the short term. And so, again, kind of similar thing through here for the other coins, kind of reminding us of that symmetrical triangle, rising demand line, flat supply. Through here. So we can imagine something like that. And something like that. And again, from the 4-hour, if we take a measured move from that point in the triangle, assuming that Bitcoin does have a short-term bounce to the upside, that we might see Polkadot actually outperform BTC for a short while. Again, this is the Polkadot to BTC ratio. Not something that I would say really ought to be traded per se. I would say if you're trading the USD chart, might be the way to go there. But again, none of this being financial advice. Really just for educational purposes in terms of how I think about classical charting and the mindset behind these charts and how it reflects investor psychology. But it's not altogether unreasonable to anticipate some short-term outperformance here of Polkadot against BTC. So something I'm definitely going to be taking a look at, monitoring in the short term for sure. So just some comments. Again, I mentioned that I had started reading the book Austrian School for Investors, Austrian Investing Between Inflation and Deflation, and read the first chapter today, and the whole chapter was pretty much resonating, reverberating, speaking to me, in the aftermath of sort of my near miss with UST and Terra LUNA and the collapse, and just sort of seeing how the collapse has really changed a lot of people's lives in an unfavorable way. And so my hope is to just share a couple of quotes from the book that I've included here for non-commercial educational purposes. Um, and so I'll just read this one here. Basically, the desire to avoid uncertainty can actually lead to the worst investment mistakes. On the one hand, we cling to the past, our inability to let go of sunk costs. Investors hang on to assets, the value of which is in rapid decline, in order not to have to admit their mistakes. The Austrian investor, on the other hand, expects that there will be mistakes and remains calm. Right? So this really spoke to me because, again, I sort of touched on how my investing thesis for Terra LUNA had been invalidated, just in a very shockingly fast, overnight fashion. And, it took me 24, 48 hours to kind of fully, realize that. But, the mentality of, well, there's no way that this could be going to zero. Do Kwon is a very smart, intelligent man. Terra is going to be the future of decentralized money. There's no way that this can go to zero. So on one hand, I had that voice in the back of my head, right? And I think that that is the voice of this right here, right? In order not to have to admit their mistakes, right? So I talked previously about how my investment thesis in Terra LUNA was actually a mistake. I was actually wrong going in from the beginning. Now, it doesn't mean that one can't profit from the price action. One can't get in at a favorable risk to reward and then get out with profits, right? It doesn't mean that you can't, but the minute something tells you, right, that, or you realize that it was a mistake, you have to admit it right there to yourself, And when I say you, I mean I'm really talking about myself here, right? So I've never felt better about a loss in my whole investment journey than my loss that I took with UST, about a 17, 18, maybe 20% loss, with slippage on, I've never felt better about a loss. I've never been happier about a loss than UST. And so the lessons from this whole thing have been really remarkable. If one wants to avoid the destructive flood of the modern bubble economy, again quoting from the book referenced here below, one must look at the crowd as a contrary indicator, a guide as to what should be avoided or what should be bought, respectively. When everybody is talking about something and it receives universal praise, there is already something very wrong with it, right? So, new paradigm, right? Terra LUNA, Terraform Labs, collateralized by Bitcoin, decentralized money, dual algorithmic collateralized thing, uncensorable money, right? $100 is going to be Luna is going to be the new floor because of this, hold for life, right? It's going to be the next Bitcoin, right? Some things that I was hearing people say about Terra LUNA. When everyone, when everybody's talking about something and it receives universal praise, there's already something very wrong with it. So it's very hard to sort of assess, right? But in terms of what's the crowd, I'm part of the crowd to some extent, right? I mean, I can't just say, oh, well, what literally everything I see out there is the crowd and I'm above it, right? I'm not so sure, right, about that. But I think, this is just something to keep in the back of your mind as you're hearing people say things, as you're collecting information, as you're processing it, as you're reading things, as you're watching videos, as people that you think that you respect are talking about something, you have this in the back of your mind. And as you're thinking about your investments, you know, after dinner, while you're running, in the shower, whatever, whenever these kind of thoughts, come up, in your day-to-day life while you're driving, right? Sometimes these thoughts just surface from your subconscious into your consciousness. And so as your mind, that's sort of your mind's way of processing the myriad inputs, the myriad information that you get over the course of your journey. Something to keep in mind, right? And to have an open mind about, as far as, could you be the crowd? Or does everybody seemingly hate you and say that you're wrong, and yet the charts are telling you something different? The charts give you the confidence that you actually may be onto something, right? So I think this is probably something that will take a lifetime to master. But I think, if you sort of commit yourself to a fuller understanding, then there's really no shortcuts other than that, to really approach it from that perspective. So I've gone on long enough. Let me know if you'd be interested in more from this book, and some more discussion about it as it pertains to crypto. And hey, if not, I'm probably going to do it anyway, because I'm finding the book very, very, very good so far. So, yeah, leave a comment, and any feedback is very welcome. And hope everybody has a good week, and we'll see you in the next video. Take care.